All right. Okay, good evening, everybody. If you're in class, please, I'd like you to just type one in this comment section. You type one in the comment section if you can hear me. I'm so excited to be here again tonight. Okay, if you can hear me, just type one in the comment section. All right, let's go. So who is in class? All right, somebody has typed one in the comment section. Who is in class? If I'm in class, I like to just type one in the comment section. Just type one. Just type one in the comment section. If you can hear me, just type one in the comment section. Just type one. Okay, all right, Mata. So let's continue. I didn't really know I was going to do come to class tonight because I've been running multiple of classes. Today we had an offline class and it took close to from 10 a.m. to like around 3 or 4 p.m. Okay, and then that was over 6 hours plus, or thereabout. Okay, so let's go deeper. Okay, let's go deeper. I'm just going to be sharing my slide again with you. Okay, I told you I lost one of the main slide. The got crashed yesterday. I need to build those slides back. But you see, the stuff is inside, but when you want to teach, you need to arrange your thoughts just progressively, systematically. There's nothing we are teaching that we have not been doing for years that we do that is not inside of us. But then to teach, you have to arrange it systematically so that you can communicate it in a way that people will learn and they learn progressively. And if you have made it to today, I want to congratulate you because you are going deeper now. And I was sharing moving average with you yesterday. So we said how to trade. Where we are now is how to trade trending market. There are three tradable markets: the uptrend market, the downtrend market, and the ranging market. Those are the three markets you can trade. The fourth one is the choppy market. And if you open your computer and you want to trade an instrument, and when you open the computer, you cannot tell the direction of the market. You don't know whether it's buying, you don't know whether it's selling, and you cannot see a considerable wide gap in between resistance and a fixed support. Just close your computer and walk away. You don't have to trade every time. The problem people have is that they want to trade every time. They want to trade every day. They want to trade every time. And we all started from there actually. But then as you grow up, you discover that 3 trades in a week might be much more than sufficient for you. 3 trades in a week if you have very good setup. And also the problem is because with majority of people trade with small capital. If you trade with small capital and then you just made like $5, $10, you convert that one to naira because it's not sufficient for you. So you are tempted to be you are tempted to overtrade you because that money the profit just made is not enough. But you just imagine you take a trade and then you made like $1,000. That $1,000 now, you can't finish spending it in 2 3 days. So what do? You will always want to wait for your A plus setups. But when you are trading with little capital, the capital is small. Sometimes some people trade with very small capital, and those capital you cannot really tell whether you are trading right or you are trading wrong because your capital is not enough for your pullbacks. It's not enough for the appropriate stop loss. Okay, we took a trade on was it on Friday? I think on Thursday. We took a trade on Thursday. I was staying there in class today. We took a trade on Thursday, GBP USD. And when I took this trade, I discovered that I just discovered that when I wanted to come out of the car, I discovered that my sunshade was broken. So I decided to let me go to where I bought the sunshade in one eye clinic, medical center or place. So they said all manner of glasses and then they said sunshade so that I can buy something a little bit fair. And I left the office and I went there. And I'd completely forgotten that I was on the GBP USD trade. So I was in the place, all these medical personnel attending to me, okay, this or this. And so by the time I was leaving the place, as I entered the car to drive, I discovered that boy, I was on a trade, oh, and I'm not the only one trading that trade. We're many, and I was like, boy, I checked the trade. I was the one that called the signal. I checked the trade. I discovered that something has happened to the trade. The trade we were buying actually. The trade has spiked down, has crashed down. But by the time I was checking the trade, it was back on our entry. And then it eventually closed in profit. But I was telling them in the signal group, I said, look, this is why you need to know the right way to set a stop loss. If I had not set a very good stop loss that time, that crash will have wiped all our accounts, will have lost that trade, and then the thing will not go in that direction again. So sometimes when your capital is too small, you will not be able to tell if you are trading right or you are trading wrong. Because you see, before you pull back, it's because you must have enough capital to be able to accommodate a possible pullback on your trade, on your trade. So quickly, let me show you, let me take you to my chart today, and I will just run a couple of slides, and then we meet again tomorrow. We meet again tomorrow. I'm excited tonight, bro. I'm super excited. Now, please, I like to type two in the comments. If you can see, let's go deeper on your screen, my chat on your screen. Please type two in the comment section. Let's go deeper. If you can see, let's go deeper. Type two in the comment section. All right. All right. So, and I like to understand that there are three basic ways, okay, that you can analyze the market. The three basic way you can analyze the market. The first one is fundamental analysis. Fundamental analysis. And this is when you use the economic data and occurrences, you know, when you're using the economic data, the news, the government policies to determine your entry and exit in the market. If you have been trading Forex, especially, you will see that this is a very important aspect in the market. Economic data, you're trading fundamental analysis. Fundamental analysis. When there's a government policy that helps you to determine or speculate of a market, then you take your entry and exit based on the economic data or policies. Okay, and you know that Russia-Ukraine war started. You see how some instruments started behaving because of the war. I believe majority of people in this class, they are in Nigeria. I discovered that from last year, late last year till now, our naira has been very stable, considerably stable. It is not, you know, it is not depreciating. It may not be appreciating so much, but it's stable. And a couple of factors affect that. The economic factors, data, and policies affect that. Number one, naira for crude. The current government has, signed into law that all indigenous refineries will be buying the crude oil in naira, and that reduces the amount of pressure that's on dollar before. And so it has made the economy stable. And you also know that Dangote refineries have started exporting, petroleum products And guess what? When he export those petroleum products, he's going to be collecting dollars. And when he collect the dollar is not going to be in his bedroom, it's be in the bank. And then partly will be available for every other Nigerian who need dollar to do one or two things that, the dollar will be made available to them. So all these things have impact on the economy, have impact. Sometimes and you remember the other day I was telling you in class that when you want to trade currency pair, the first place you go to in the morning is Forex Factory to check what the news is. So when somebody is using the news or the economic data released to determine entry and exit in the market, is analyzing the market, is using fundamental analysis to trade. Is when you use the news in the data. Most of those majority of the news that we trade, that we see on Forex Factory, are the release of economic data, the release of data at a certain time. So when the news is released, it has a signal to the investors, a signal to the investors. The other time when Trump came in and became president, something called Trump coin, BTC literally got appreciated. I mean, generally crypto appreciated at least for a while. Okay, is when they use data to determine entry, economic data determine entry and exit. For example, something like NFP, non-farm payroll in America. Whatever data happens there can make or can affect the direction of the market. And then next to that, we have technical analysis. In technical analysis, we are talking about using your charts to determine your charts, your candlesticks, your chart pattern strictly behind your screen. When you use what you see on your system, the candles, the chart patterns, the market patterns, the whole manner of your use indicator, when all your decisions for entry and exit is based on what you see on your chart, that's technical analysis. And then the third one is sentiment analysis. Sentiment analysis talk about just sentiment, just being biased. Sentiment in the sense that there's no economic data, but you just have a feeling based on a news that you have had, but you cannot substantiate it with the data. Sentimental analysis. And I always give example, you know, to my students in class. I remember I was teaching something like this today in class, in physical class, and I was telling them, I said, look, just like in Nigeria, in our country, Nigeria, if you're from Nigeria here, you discover that until the last year or 2 years ago, when we see that usually around Christmas time, there's usually fuel scarcity. All the filling stations got filled up with long queues, and people are on queue just to get fuel into their cars and to their generators and the likes. The companies are on queue, the fuel gets scarce, and then the price goes up. But then, so what usually happen? Imagine how that usually happen, and you discover that NNPC will release a news, a circular that look, we don't know why the fuel is getting scarce and getting expensive because we did not. The fuel being released from NNPC is still the same. Nothing has changed. Nothing has gone wrong. But so what happened? I suppose that maybe sometimes somebody just wake up around maybe December 20. I find that and began to think, where was I last year, December 20? I discovered that last year I was in a filling station and I was looking for gas, looking for petrol or diesel to Okay, are you seeing technical analysis on your screen? If you can see technical analysis on your screen, please type 3 in the comment section. Type 3 in the comment section. You can see technical analysis on your screen. Please type 3 in the comment section. Just type 3 in the comment section. If you can see technical analysis on your screen, type 3 in the comment section. All right. Thank you. Let's continue here. The real job is in the technical analysis, you'll be introduced to technical analysis. In this session, you'll be introduced to technical analysis to help you develop the foundation needed to understand simple technical concepts in trading. Then look at the next thing, definition. Technical analysis is the study of the past price activity in order to forecast the future price direction. Technical is the study of the past price activity in order to forecast the future price direction. The past is the study of the past price activities in order to forecast the future price direction. Now, it is the study of historical price movement. And remember that history has a way of repeating itself. History has a way of repeating itself. There are two statements I'd like you to pay attention to very, very well. Two statements. Number one, trend is your friend. Two statements I'd like you to pay attention to very, very well. I said, number one, trend is your friend. Never forget that. Never forget, trend is your friend. Two statements that you must never forget in your life. Number one, trend is your friend. Number two, history repeats itself. History repeats itself. Okay? Can somebody type those two statements in the comment section? Number one, trend is my friend. Just type it in the comment section. Trend is my friend. And then number two, history repeats itself. I like you to type the two statements in the comment section on the chat box. Trend is my friend. Number one. Two, history repeats itself. Trend is my friend. Write it in the comment section. Write the full two statements. Trend is my friend. History repeats itself. Type it in the comment section. Trend is my friend. History repeats itself. This might sound theoretical, actually, at the beginning, but as time passes by, it begins to make practical sense to you. Yeah, trend is my friend. Somebody has typed it. History repeats itself. All right, thank you. Trend is my friend, and history repeats it. These two statements are the most important statement, for a profitable and successful forex trader. I'm telling you. History repeating itself. I like it. My goodness. Oh boy. And so let's continue. And so the primary aim is to focus on the statistical analysis of the price movement in order to understand price action evolving into trends in the market. The primary aim is to focus on the statistical analysis of price movement in order to understand price action evolving into trends in the market. So we have technical analysis now. At technical analysis, we identify trends. You use indicator and moving average. Moving average is an indicator. So I already taught you yesterday how to use moving average. We have moving average 10, EMA 10, EMA 50, and EMA 200. And we say when the red line crosses the blue line from down up, buy. When the red line crosses the blue line from up down, sell. When the red and the blue line cross the black line from down up, buy, strong buy, heavy buy, very strong buy. And when the red and the blue line cross the black line from up down, strong sell, sell, sell. Very important. So that is the way to trade the trade market using moving average. Then we have candlesticks. Then we have support and resistance. All of this is going to be taken one after the other and going deep and elaborating and expatiating on them. So let's go deeper now. Let's go deeper. This is where it gets much more interesting. This is where it gets massively interesting, and I love it. I love it from here. Now, going historical pattern, going back to the 19th century, the father of technical analysis, Charles Doe, observed that. Now, listen to this. Listen to this. Very important. It is the direction of peaks and troughs that define the trend of the markets. Oh my goodness. The direction of the peaks and troughs that defines the trend of the market. And don't forget that our goal is that we want to make trend to be our friend. And how do we know which trend the market is? Now, the father of technical analysis, they are now telling us that the direction of the peaks and trough that define the trend of the market. Because you must follow trend, we must find out what is the trend and how do we identify trend. And here he's telling us when you see the direction of the peaks, wherever the peaks and the troughs are going, that is the trend of the market. If the peaks and trend, if they are going to the top, if they are going up, they are going to the upside, that means it's an uptrend. That means the bullish trend, and therefore we'll be looking for opportunity to buy. And then he said the direction of the highs and lows is this thing the same thing, is what reveals the future movement price. The direction of the highs and lows is what reveals the future movement of the price. I like it. I like it. Don't worry, it's not theoretical to you, right? But it's very practical. I'm saying, you see, this statement that I just showed you on the screen now is the beginning of my transformation as a financial market trader. I'm telling you, this is the beginning of my transformation. Nothing has changed my trading like what I'm about to start sharing with you. And it will blow up your mind. It will change your life. Going back to the 19th century, the father of technical analysis, Charles Doe, observed that there is no two ways to it. It is direction of the peaks and trough that determines the trend of the market. And you know that, so what he's saying is this: if you have peak, if the market is, the peaks and the trough, if you see that it's towards the upside, no. So this guy is saying that in this scenario now, if you are seeing the market is making higher highs and higher lows, it is said to be in an uptrend. So he said the direction of the peaks and the trough is what defines the trend of the market. That's remarkable. This is exactly what we are seeing here. This is what we are seeing here. This is what we are seeing on my screen now. I'm trying to wait to let it load. All right. Okay. All right. That's loaded. And so now this is the peak. This is the trough. This is the peak. This is the trough. This is the peak. This is the trough. And Charles Doe is saying if the peak and the trough are to the upside, it means that the market is an uptrend. It defines the direction of the peaks and the trough is what determines the trend of the market. So he's saying that when you start seeing the peak and the trough getting higher than each other, then the market is said to be bullish. Now look at it now. The peak, the trough, the peak, the trough, the peak, the trough. And then the peak and the drop, they are to the downside, and that tells you that the market is bearish, is a bearish market. And therefore, I will only be looking for opportunity to sell. And we have, I don't know whether I've shared that one with you, we have impressive movement, pullback. We have impressive movement, pullback or retracement or correction. We have impressive movement, we have a pullback. We have impressive movement, we have a pullback. The same thing, impressive movement, pullback, impressive movement, a pullback. So in the direction of the peaks and trough that determines the trend of the market. Now, he's saying the same thing. He's saying the same thing for the downside. He said, if you see the peaks and trough to the downside, that's the direction of the market. That's the direction of the market. And then we have, of course, the ranging market. Let's move further. Let's move further. Then look at my screen. Okay. So he's saying the uptrend, because the peak and the trough are to the upside, we have the uptrend, then we have the downtrend, then we have the ranging market. These are the three markets you can trade. These are the three markets you can trade. And the first thing you're going to know, I used to tell this story in class every time I'm teaching my students. I said, look, many years ago when I started to trade, most of these things that has now become part and parcel of us. I knew that if you want to be a successful trader, there are certain things that must be in your subconsciousness. Subconsciousness. So I remember I had rules they had about 9 rules that I wrote out in papers, and I circulated it everywhere in the house. I literally pasted it up in front of me on my wall in my trade station there. I pasted it like this before me on the wall at my front because I had my small table and I was in a rented apartment. Okay, I wasn't living in my house then, and so I put it to the front like this, and I'll be looking at it, the rules that I must follow, so that I will not forget and lose trade. Okay, I don't forget and lose trade. Even as at 2019, I've been giving signals. Been trading as a group. 2019, 2020, I've been a signal provider since 2019. And so I will put those rules there so that I will not, it must be in my subconsciousness. So my rule one is that what in the world is the market doing? I will solve it, I will provide answers because I'm trying to train my subconsciousness. What is the trend of the market? So I will write it down, uptrend. Then the next question is, okay, where am I joining the market? I'll be writing it down. What will be my signal, my entry? I'll be writing it. What am I going to be looking for before I will enter the market? I'll be writing it down. Now I don't write it down again like that, but because it is now in the subconsciousness. But even these days, too, there are certain things I write on my screen, on my charts that guides me so that I will not get lost in the candle movement and enter trade when my setup is not fully right. Okay, so now look at this thing. Now look at this statement. This statement now can save you from losing money because people lose money because of the ignorance of what's on this slide here. People lose money because of the ignorance of what is on this place here. Okay, just a minute. Okay, sorry. Now let's read what's on the screen. A reversal, understanding reversals and retracement. Understanding reversal and retracement. And let me tell you something. The day you fully understand the difference between a reversal and a retracement, that day your trading career, your trading, your trading, uh, your trading will change exponentially. A reversal is defined as a price turning point to the opposite direction of the previous trend. Price reversal. But then a retracement is defined as a price pullback within a trend. A price pullback within a trend. A retracement does not signify a change in the larger trend. A retracement is not a reversal. A retracement does not signify a change in the larger trend. It doesn't signify it. It doesn't signify a change in the larger trend. So please pay attention. A retracement is defined at the price turning point in the opposite direction of the previous trend. A retracement is defined as a price pullback in a trend. A reversal is defined as a price turning point to the opposite direction of the previous trend, whereas a retracement is defined as a price pullback in a trend. A retracement does not signify a change in the larger trend. It is just a pullback. The moment you understand that, look, so what people say is that they start taking trade on a pullback. They think that the reversal, the price has changed direction, whereas it has not changed direction. It does not change direction. It's just a pullback. And let me now take you to this next slide that will change your life forever and ever. And everybody said amen. Right. Thus, my goodness. Thus, if anytime I'm in the class and I'm in physical class, I mean, when I'm teaching in physical class, I used to run around the class with this. Anytime I get to this point, I run around. In those days, I used to scream, run around, go, boy, thus. When the market experiences, oh boy, oh boy, oh boy. When the market experiences two peaks, yeah, and troughs, yeah, successfully higher than each other, then the market is said to be in an uptrend. Gaskia. When the market experiences two peaks, oh boy, and troughs, two troughs, successful higher than each other, then the market is said to be in an uptrend. That means the uptrend has started. Oh boy. Oh boy. I wish you can write this one down in a note of in a in your notes. When the market experiences two peaks and two troughs successfully higher than each other, then the market is said to be in an uptrend. How do you know that the uptrend has started? He said when you count the peak one, the trough one, the peak two, and the trough two higher than each other, uptrend has started. Therefore, henceforth, I will only be looking for opportunity to buy. I like this thing. This is mind blowing. This can transform your life forever. My goodness. This is wealth I'm releasing into your hand. This is this is Ferrari. This is Lamborghini. This is your own duplex. This is your own house. This is a fund to fund your vision. This is money to fund your vision. This is your school fees you are getting to pay. This is money you can use to help your family, help your loved ones. My goodness. When the price experiences two peaks, oh boy, and two troughs, successfully higher than each other, then the market is said to be in an uptrend. Let me check if somebody is still in the class with me. Oh boy. Can somebody type two peaks and two troughs on the comment section? Let me know if somebody is still following me. Two peaks, two troughs. Just type two peaks, two troughs. Two peaks, two troughs. In the comment section, I want to be sure somebody is following me here because I'm excited about what we are sharing tonight. I'm super excited. I'm super excited. Two peaks, two troughs. When the market experiences two peaks, two troughs successfully higher than each other, then the market is said to be an uptrend. Just type two peaks, two troughs. I'm waiting. I'm waiting for someone to type two peaks, two, just TWO, then peaks, PEAKS, and troughs, TROUGHS. Two peaks, two troughs. Amazing. Amazing. All right, so let's continue. This will change your life forever. I'm telling you. I'm telling you. I'm telling you. If you see me winning every single time, or most of the time, it is because of this simple understanding. Two peaks, two troughs. So let's continue. Let me get back to my slide. And now let's take the next slide. Of course, the opposite is true. Of course, of course, the opposite is true as well for a downtrend. That is, when the market shows two peaks and two troughs successfully lower than each other, then the market is said to be in a downtrend. Oh boy, the opposite is true for a downtrend. When the market shows two peaks and two troughs successfully higher than each other, then the market is said to be in a downtrend. All right. All right. My, oh my. This is where the money is, bro. I'm telling you. If you get what I'm sharing with you tonight, what I will begin to be sharing with you from tonight, because you can't finish it, you have made it for life. You can literally say, you know what? I've got it. Eureka. At the end of tonight, I'm telling you, even though we still have a lot to share, you can run around in your room and say, boy, I got it, 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 I've made it. Oh boy, oh boy. And so this is uptrend, this is downtrend. So I'm counting peak one, P2. sorry, P1, T1, P2, T2. The one you see P1, T1 is peak 1, trough 1, P2, T2, that's trough 2, substantially higher than each other. Then that means the bullish market has started. Therefore, henceforth from here, I'll begin to look for opportunities to buy. Ay, 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 ay. Oh boy. All right, so let's look at the downtrend. You have had 2 peaks, 2 trough. 2 peaks, that's P1, T1, P2, T2, successfully lower than each other. The downtrend has started at the completion of the T2. For a downtrend, at the completion of the T2, downtrend has started. At the completion of the P2 in an uptrend has started. Oh boy. Now, the work of Charles H. Doe, that means the same man I'm talking about, the father of technical analysis, and his partner, Edward Jones. You know, these guys, when you hear Dow Jones, this is US 830. Dow Jones actually means they are the founder, they are the owner of that indices called Dow Jones. I told you many years ago, in 2019, 2020, and 2021, I can give you signals on Dow Jones 20 times and you will win 18 to 19 times because that instrument respect technical analysis like crazy. Oh boy, Dow Jones. Dow Jones and Company since 1882. Back in the end of 19th century, also known as the last tenet of Dow Jones theory, states that trend remains in its effect until a clear reversal occurs. You know, sometimes if you check like a couple of weeks back, I was telling people, I said, look, people were speculating that gold will start selling. Gold will start selling. I said, until I see a clear reversal, I'm not going to sell, I'll continue to buy. This is my understanding. Trend remains in its effect until a clear reversal occurs. Trend remains in its effect until a clear reversal occurs. Therefore, trend exhaustion lead to trend reversal. This thing look like theory too. Don't worry, we'll get to the practical part of it. Oh boy. It look like theory, right? But don't worry. When you go to the chart, you understand it clearly. Trend remains in its effect until a clear reversal occurs. Trend exhaustion lead to trend reversal. That means when one trend is exhausted, that means a reversal trend is about to occur. It's about to occur. It's about to occur. Okay. So I want us to go back to. I want us to now get to the chart now. I want us to get to the chart. I'm just going to be spending the next 5 minutes on the chart. Then we'll continue tomorrow. Oh boy, I like this. I like this because this is what changed my life. So let me share my screen with you. Let me share. All right. Can you see my screen? Can you see chat on my screen? Can you see candlestick on my screen? If you can see my screen, please type 4 in the comment section. Type 4 in the comment section. If you can see my screen, type 4 in the comment section. If you can see my screen, type 4 in the comment section. If you can see my screen, you can see the chat on my screen. Is anybody here? Okay, type 4. All right, 4. All right. So let's continue. And so now, so let me do something. Now look at what I want to do on the board. So let's assume this market is coming down like this. This is a peak. Okay, so maybe we should pick it from here. Pick it from here. Let's pick it from here. This market is coming like this. Then we have, okay, you know that this market is selling. This market is selling down. It's selling, it's selling, it's selling. But how do we know that the uptrend has started? Now, this is a peak. This is another peak. As long as this peak is not broken, we are still selling. Then it goes lower and form another, lower high, and form another lower high. If the market does not break this, okay, we are still in an uptrend. Then it goes lower to form, and that just broken this lower high now and close above it. Now it has closed above it. This theory says when I see two peaks and two troughs higher than each other in an uptrend. Now I am on 4-hour time frame. You can do this on daily time frame or 4-hour time frame. Daily time frame or 4-hour time frame. I'm on 4 hour at the moment. So now this peak has been broken. This peak here has been broken by this because this is now the price has now broken into the upside. The moment I see that, this is what I do. The moment I see this, I know that maybe an uptrend is about to start. So what do? I do my P1. Look at it. Look at how I'm going to label this thing. No, this thing I'm telling you is the secret of making it in the forex space. If you don't get it, you just have to get it because I'm here. That's why I'm here. I'm here for you to get it. That first one, this is now my P1, and then my T1, my peak one, then my T1, my trough one. Then I have my P2, then it close lower. Now, what you're going to see is that the T2 is not closing lower than T1 because if the T2 closer, if the T2, okay, this is my T2. If the T2 close lower than T1, it means the sell continues. Forget about it, the sell continues. But this T2 now is not closing lower than T1. It's not closing lower than it. It can form a double bottom, but it's not close lower than it. And so it is here. That means anything from here, anything from this break to this side now, I will start looking for opportunity from here now. I'll start looking for opportunity to buy henceforth. Henceforth. Henceforth from here now, I'll start looking for opportunity to buy. I know it may look complex at the beginning, but this is the secret of making money every day in the market. When the market make two successful peaks and troughs higher than each other, it is said to be in an uptrend. And therefore, so as long as from here now, I will continue to buy this market until my support is broken. In the last class I did online, the group before because I'm currently teaching so many groups together at the same time. Your own group is CHICS in Trade. I have another group, mentorship with Dom. I have the physical class. I have another. You are all on different curriculum, different stage of my syllabus. But there's something I was telling them in the other previous when I started teaching this place. So I used to tell myself, I promised myself I will never sell on this market except this support is broken. I will never sell this market except this support is broken. I will never sell this market except this support is broken. Now my support is broken. Now my support is broken. I don't know whether you get what I'm saying. The moment I can't P1, I know that all I'm looking for is a buy. So I'll be looking for the next, just like here now, I will not buy except this resistance is broken. I will not buy except the resistance is broken. I will not buy except the resistance is broken. Now the resistance is broken now, then I will not count my P1, P2. Now look at it from here. I will not buy except I will not sell except the support is broken. I will not sell except support is broken. I will not sell except support is broken. Now my support is broken here, bro. My support is broken here. It has broken my support. So the moment I see my support is broken, I start again, bro. My T1, my P1 rather, my P1. I start again. Then the first place that broke is my T1, my trough one, my T1. Then I start waiting. I start waiting for my P2 to be formed. My P2 has formed here. My P2. My P2. My P2 is here. Then you see my T2. My T2. Oh boy. My T2. My T2 is here. So what it means is that from here onward, I will only be looking for opportunity to sell. From here onward, I will only be, the moment I count my P1, T1, P2, T2, I'll be looking for opportunity to sell from here, from here. How do you not join? How do you not get your entry to sell? Is what we're going to be going deeper into subsequently from this class. My P1, P2. And so after I count my P1, P2, I'm not telling myself, I will never buy except this resistance is broken. I will never buy except resistance is broken. I will never buy except the resistance is broken. I will never buy except this resistance is broken. I will never buy except resistance is broken. I will never buy except this resistance is broken. Now my resistance is broken, bro. My resistance is broken, bro. It's broken here. The moment it breaks here, I start again. Pum, 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 pum. I start my P1. Oh boy. My P1 is here. My P1. Then I start my P2. My P2. My T2 rather. My T2. Sorry, oh no, my T1 now. My T1 now. My T1. Then I count. Then my T2. My T2. Sorry, my P2. My P2 rather. My P2. Then my T2. My T2. My T2. My goodness. So that means henceforth from here now, from here, I'll start looking for opportunity to buy. I'll start looking for opportunity to buy from here. And when I look for opportunity to buy from there, I will never sell except the support is broken. I will never sell except 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 support is broken. Now support is broken again. I count my P1, P2, T1, T2. So now I like to type in comments because I'm writing on this class right now. Oh boy, I stay longer than I planned. So I like you to type in comment section. I will never sell except support is broken. I will never buy except resistance is broken. Come on, write it in the comment section. I will not sell except support is broken. I will not buy except resistance is broken. I will not sell except support is broken. I will not buy except resistance. In the comment section before we end the class tonight. I want to know if you are still with me online. I will never buy except support is broken. I will never sell except support is broken. I will not buy except resistance is broken. I will not sell except support is broken. I will not buy except resistance is broken. Beautiful, beautiful. Who else is typing? I will not sell except support is broken. I will not buy except resistance is broken. Beautiful, beautiful. Someone else is typing. I wait for one or two more persons to type. I will not buy except resistance is broken. I will not sell except support is broken. I'm waiting for someone else to type it also. Beautiful. I will not sell except support is broken. I will not buy except resistance is broken. Beautiful. So let me take you back to the rules so that we end it on that note. I said the rule here is that when a market makes two successful peaks and two troughs successfully higher than each other, then the market is said to be in an uptrend. When the market makes two successful peaks and troughs lower than each other, is said to be on a downtrend. And this is just the beginning of where we are actually going. This is the beginning of where we're actually going. So I'd like you to go and look that one on your chart, on daily time frame, on 4-hour time frame. You can even do it on 1 hour time frame. But then the instruction is this: if you look at this on daily time frame, that means you want to enter your trade on 4-hour time frame. If you look at it on 4-hour time frame, that means you want to make your entry on 1-hour time frame. If you look at it on 1-hour time frame, that means you want to take your entry on 15-minute time frame. So I'm going to be going deeper tomorrow or in the next class, and I wish you all the best. Okay. Did you learn something tonight? If you learned something beautiful tonight, I'd like to type 5 in the comment section. Just type 5. I learned something beautiful tonight. Just type 5 in the comment section. Type 5 in the comment section if you learned something new tonight. You learn something new. This will change you. This what I'm just sharing with you now is money untold, as in money that will change your life, change your family, change everything around you. If you can be patient to work it out. All right, fine. Thank you so much. I'll see you again tomorrow in class. And I want to say, God bless you. Bye bye.